Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video is for Wednesday, October 24th, 2012. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. Well, folks, we just got the FOMC policy statement, and pretty much everything stays the same, except the Fed says they're basically going to keep doing as much stimulus as needed, depending on the jobs numbers. And obviously, lately, the jobs numbers have been okay, but not spectacular. So it does tell us that the Fed is on there, ready to act. The markets initially are seeing a little bit of a decline here. It's not exactly a big reaction, but the spiders are sinking down. I'm not sure exactly what the markets anticipated the Fed saying, but obviously by the small downtick, it's basically in line to maybe the market expected a little bit more. And again, that's just going off the reaction, which is what we have to do here in the markets, at least in the interim. All right, so again, market today very quiet in terms of just kind of bouncing around. We opened up decently higher on the back of China PMI data last night, as well as Facebook earnings. The markets fell down into the support line at gap fill right here, bounced again into gap fill, bounced, and then are now hitting that same level again. So it's a very, very tight range market right now. Now, looking at a couple things, guys. Let's go to Facebook. Facebook, a monster move up. Why do you think Facebook went up on earnings? Well, the average person is probably going to say, well, their earnings were decent. Well, yeah, but I mean, it's up, 20% today. Were earnings that good? I mean, they beat by a penny, revenues in line. Guidance was decent. But is that why it's up $4 today? That's the big question, right? And what you have to start to do is analyze sentiment. Sentiment and contrarian view is very, very important because in this case, yesterday after hours, when initially Facebook sold off on earnings before it popped up here, I bought some. And the reason why I bought some is because I knew that the sentiment was so negative and there were so many shorts in the market that chances are Facebook would see short covering because the earnings were not that bad and they were actually slightly positive. In other words, the market had built in some negative views, and that's what the price of Facebook was reflecting. So when it was neutral to positive, a lot of short covering comes in here and the stock pops up. And I made a nice chunk of change, as did some of my members on that, moving up dramatically here into the open today and kind of trading up about $4 on the day. Spiders are starting to move back up. We're still seeing the reaction of the Federal Reserve here. And again, you can see the pop back. If the markets are able to hold here, they may start to break up a little bit later. So be on guard for that, guys. It's definitely a plausible possibility, no doubt about it. Plausible possibility on this market. All right. I'm just trying to scan through, seeing if there's any trades out there that I want to take right now. As the spiders are pushing up nicely here. And in the end, this looks more and more like the market could go a little bit higher here as the Federal Reserve again says that they'll basically do whatever's needed. Even after QE3 Unlimited, they still are willing to do more action to keep interest rates low. Again, we'll kind of watch and see. I don't really see anything right now on my radar, but I will keep a close eye on it. Spiders, again, we'll check back in here. Really what you're looking for is if you break this purple line, or this pinkish line right here, which was the high pivot before the consolidation, that's the one that'll tell you, again, if the markets are breaking or not. That line happens to be at 141.75. All right. Spiders, again, just chopping here. Looks like we're starting to push up a little bit more. Let's see if we make a move here. Amazon inching up a little bit. Amazon chart not bad. It's really oversold short term, so that's not a bad chart on Amazon. Again, it's been under some pressure lately, but again, coming back a little bit. Let's just see what else we have here. Research in Motion's popping up a little bit here as well as the SPY starts to pop up. Looks like we're coming right into that 141.75 level, folks. Let's see if we take that out. And again, that would denote a little bit of a breakout on this market to the upside. Okay. Let me just go through a couple of the charts here. Google flat on the day, although again it's trying to pop up a little bit. Apple initially had a monstrous gap up of about $10, reversed, went negative, went to yesterday's lows, and then came back up here and is now up $4. So a little decent move on Apple. Really whippy after that iPod mini was introduced yesterday, between the drop yesterday, the pop this morning, then the drop again, and now it's floating up, seeming to find its equilibrium. Chevron having a nice day today. CVX is the symbol there. CVX, let me type it in. There we go. And Chevron is trading up just a tiny bit here. As you can see, Chevron actually decent bullish consolidation. So Chevron's telling us that there's a chance of a little bit of a breakout. Let me just jump back to the spiders. Spiders are right there, folks. They are right in that range. Very, very close to a little bit of a breakout. So we'll keep an eye on that and see if it does occur. Okay? I'm just trying to scan through again as we got some action here. I'm trying to possibly trade at the same time I'm doing this video, which is always a little on the trickier side. But it's doable. If you know what you're doing, it's doable. All right, so other than that, folks, spiders, again, this right at that level. This is right at a key level. Any close above this line, which we have about 2 minutes to do, in my opinion, you would see the spiders head towards the highs of the day. And, again, the Federal Reserve coming out and announcing. Let me just scan through a couple other charts. Goldman Sachs trading here, up on the day about $1.86. Decent move on Goldman. JP Morgan also higher by about 50 cents. JPM really at the highs of the day here. So that's showing some signs of life. Let's take a look at the spiders again. Keep on flipping back to that. Spiders are pulling off that level. They weren't able to get through, as you can see. So this market's still in purgatory, if you will, kind of just hovering without any firm breakout or breakdown. And again, notice how you didn't close below the low of the day here, and now you're fighting with basically this trend line right here, which denotes the range we've been in for most of the morning and early afternoon session here. All right. What else do we have here? Scanning through. Let's take a look at First Solar today. What's going on with First Solar? FSLR down about 14 cents. Stock had a nice recovery yesterday as the whole market kind of came off its lows. But today it's pretty much just holding on the flat line. Spiders, again, remaining underneath that key level, which I'm going to continue to monitor. GM, General Motors, up 9 cents. Nothing doing there. Caterpillar. Let's take a look at Caterpillar. Caterpillar's beginning to inch up a little bit. Nice little tails there as the market had flushed. So did Caterpillar. So kind of holding steady there. See what else we have here. IBM is another key one. IBM's up about 31 cents on the day, so IBM, again, into the 50 MA, but it is hovering off those lows. IBM had a kind of an ugly sell-off in the late morning session into about the midday session, although it has come off those lows now as the market is trying to push up. All right, again, we're just hovering underneath that 141.75 level by about 5-6 cents. Candle's going to close here, though, and it's not closing above. So we have just closed onto the next 10-minute candle. We have not closed above. Therefore, again, we had to really know if it's a break, we need to know a close on the next candle. Okay, and we'll watch that very, very carefully. It's still very possible. I mean, you had a great reversal off these tail lows, but we have to watch. And it's interesting to see the markets basically back to where they were trading prior to the Federal Reserve. What, again, that tells us is that essentially everything the Fed said was already factored in the market. Spiders are now starting to sell a little bit. So we're coming back in. Again, no breakout, no breakdown. You're still stuck in kind of a purgatory level. And this is how you have to monitor the markets. You know, amateurs jump early. Amateurs would have bought right there thinking, oh, it's going to break through. You do that, you lose. That's simple. You do that, you're not a good trader. That's simple. All right. Let's see what else we have here. Amazon remains lower here. RIM slightly lower as well, down 7 cents. Hovering. Apple still trading up 5 or so. Apple's getting a little bit of a boost. Spider's beginning to move up just a little bit as well. So we are seeing the market beginning to inch back up towards that same breakout level. And it is very, very possible that we do take it out. But let's watch and see. We're just kind of following the charts right now. Following the charts as we continue to hover here. One stock I gave out today, folks, which is a no-brainer, was SRPT. I love the bullish consolidation off the bottoming tail right here. See the bottoming tail? Bullish consolidation. Look at the breakout today. That was a sweet chart. Also, one thing I just want to mention here, one of the reasons why I liked SRPT, it hit a high of 45 on the big drug news. Since then, it pulled back. Guess what the exact low today was to the penny? 22.5. 22.5. What does that mean? Well, what's half of 45? That's right, 22.5. If you figure these things out, you get a good sense of where a market or where a stock can bottom out or top out. And sure enough, great little move up off of that level from 22.5 to 24 and change, almost a $2 move up off those levels on SRPT. So it was just kind of a no-brainer based on that factor alone. Then you take into account the massive pullback it's had from a high of 45, and you get a good sense there could be a bounce coming in right in this range. So nice little trade right there, given out to the intraday stock chat members, as well as I gave it on Traders Life 24/7, which is our social network here. Just a side note here, what's the key here that you must remember? In the Money Stocks offers a 7-day free trial. You want to get involved, you want to trade these markets, you want to be profitable. You can be a swing trader and investor. You go towards the Research Center 7-day free trial. If you do the intraday stock chat thing, that's for day traders. All right, so swing traders and investors, Research Center. You're going to get swing trade alerts. You're going to get market analysis. You're going to get proprietary techniques that little to few know in the world that work better than anything else anyone's ever seen. Let's go back to the spiders here, which are pulling back a little bit. And you get videos every day. You get daily market reports every day. I mean, it's just a plethora of information there. And there's a 1-week free trial. So it makes no sense not to take it. At least try it out. We're just continuing to spit out profits beautifully, which I love to see. And that's what it's all about. So, again, we'll keep you guys posted. But bottom line is, I'm going to be watching this market. I may be going long here in a minute if we start to break out. It looks more and more likely. The more we hang up here, the more and more likely it does appear we will see a little bit of a breakout. You can see we're starting to pop here, so it looks like a possible breakout. Let's see where this candle closes. Take care, guys.